One knows what's going to happen. How would you relate it, Nabila, to business owners?
You cannot miss having any income coming through that door.
I kept adding more and more.
And those are things that are unpredictable. Just like life insurance, we do not know when death comes.
I'll be bringing each week a different guest with all the answers that you have the questions for. And this way you can come back to my podcast for any questions that come to your mind, and you can focus just on working, as everything else this podcast will provide you. Hi, and welcome to the Simple Wealth Wisdom Podcast. I'm your host, Gakhar. My work helping successful business owners and professionals like you build and maintain your lifestyle and legacy exposes me to many very interesting specialists in tax, accounting, law, estates, and investments. In this podcast, I share those people with you and your team so you can hear directly from them. So, if you're a successful business owner or self-employed professional, stay tuned for a lot of business building value. Today, I'm very excited to have Nabila Sabir as my guest. Welcome, Nabila.
Thanks, Sim. It's a pleasure being here with you today.
Thank you so much. Nabila has been within the insurance industry for past 30 years. She doesn't even look 30.
Thank you.
And during her journey, she has worn several different hats, from wholesaling, inside sales, marketing, new business, underwriting, policy changes, and customer services. You've been there and done it all. Absolutely. She's well versed with protection solution strategies, life and living benefits insurance products, and how to deeply serve client needs. I'm so happy she understands the client so well. And I'm so honored to have you here, Nabila.
Thank you.
She holds CLU, which is Chartered Life Underwriter, and CHS, which is Certified Health Specialist designations. These are very, very important designations for our industry. And I'm very excited to have Nabila with me here for my business owners and my self-employed professional clients, as she's going to be talking about living benefits and very especially disability insurance. Self-employed professionals and business owners are their own bosses. And for them, having a protection like that is very, very important. So let's start right from here, Nabila. And my very first question to you is just for a layman. What is disability insurance?
Thank you so much, Sim. And the fact that you've even thought of disability insurance, this is something that is very unique in the industry. Not everyone actually provides this strategy to their clients out there.
Right.
It is something that is not talked about. Mm-hmm. We've got all these insurance advisors out there, but only 10% of these advisors actually present disability insurance to their clients, whether it's personal or business owned. And this is something very, very important. The analogy that I always use is if you had an ATM machine in your basement, and every morning you went down to that ATM machine, and that ATM machine gave you money. You take that money and it pays your bills, puts food on the table, supports the lifestyle that you have, and your savings. And one morning you go down to that ATM machine and there's a system error and a glitch, and there's no more money coming in. How are you going to support that life that you have? Put food on the table, pay for your children's education, the mortgages, because nothing stops. Bills never stop.
Lifestyle never stops. And you're so used to a lifestyle.
And so the analogy is the ATM machine is you. Make sure that your income is fully protected, because you cannot miss having any income coming through that door, whether it's due to an illness or an injury. And those are things that are unpredictable. Just like life insurance, we do not know when death comes.
Very well said. So when we're talking about this, that no one knows what's going to happen, how would you relate it, Nabila, to business owners or self-employed professionals?
Thank you, Sim, for asking that question. Business owners take so much pride in their business. If you ever speak to a business owner, they can sit and talk to you for hours about their business. They're so passionate because they've put in so much time and effort, and they're making a difference in people's lives. But business owners have twice the obligations. They have personal obligations, and then they have business obligations.
Right.
It's double. Personal obligations, the mortgage is there, the rent is there, the savings, the food. And on the business front, same thing. Rent or lease, depending on where the offices are, employee wages, utilities, the bills are there, equipment rental, that is there. So a business owner has twice the obligations. They've got to make sure that the personal need is taken care of and the business need is taken care of. And if money is not coming through that door, they won't be able to take care of any.
So are you trying to say that a business owner should have two disability policies, one to protect them personally and one to protect them on their business?
Absolutely.
And how can that happen?
So on the personal front, they would buy a disability based on the income that they are taking.
From the corporation personally in their hands?
Yes.
Perfect.
And what happens is a lot of times we'll look at what their gross is and after after expenses, they look at the net, and based on that, we can provide a business owner with a monthly income. So if they became sick or injured, that personal DI will help them take care of their personal needs.
Right.
Okay. Then on the business front, they need money coming through the business while they're taking time to get well. So that is another strategy that we have for business owners. Mm-hmm. And usually that strategy is called the business overhead expense.
Overhead expense, yes.
Yeah.
So that's a part of disability insurance.
It is part of disability, but it's for business owners.
It's for business. Is that a standalone policy?
It is.
It's a standalone policy.
It is a standalone policy. And what happens with that is they look at the individual's fixed expenses. Mm-hmm. And that would be employee wages. They would look at rental equipment, any insurance, liability insurance that they have, utilities, telephones. So that fixed expenses, that would look. So usually a business owner can have fixed expenses anywhere amount from $10,000 going up to $30,000 a month. Now the business owners that we're talking about are smaller business owners that have less than 10 employees, okay, or more. So they have enough business expenses that are about around 30 to 40,000. Nothing beyond that. We have other strategies for business owners that have more employees.
Okay. So maybe those strategies we can discuss in our next podcast.
Absolutely.
But in this one, let's stick to what an average business owner is.
And there's self-employed individuals too as well.
Just like a lawyer.
Yeah.
They have a law firm. They have 7 people working. I'm going to go a little back, Nabila. This is coming to my mind, this question. Normally, whenever I have a disability policy on myself, and I've got, in fact, as I kept growing in my practice, I kept adding more and more. But I just want to know, there is something called coordination of benefits. I mean, if somebody makes $20,000 a month, they cannot have a disability policy paying them $40,000 a month because you can only get a portion of your income, maybe 60 to 70% from one policy. Now that you said you can have something on the business side, I hope personal and business do not do that. It's totally separate?
Totally separate.
Wonderful.
Because on the personal front, they look at your T1 or T4, whatever you get.
Okay.
Based on the annual income, that drives the monthly benefit amount.
Okay.
So your occupation plays a big factor in your personal DI because that provides you with the occupation class.
Right.
Your annual income drives the monthly benefit amount. And your profession can also, with RBC, we have the established professional program where certain professions can get discount up to 20%.
Okay.
So we do provide that because they are, could be an executive, a lawyer, a doctor, an actuary. So there's different professionals. There's a lot of executives out there that are making over 300,000. They have, their management and they've done the MBAs and out there. So they would qualify for those. Now, IT professionals are an industry that hasn't been touched. So there's a lot of business owners with the IT industry and software engineers and hardware engineers.
Oh, wow. That's one fantastic.
And they're self-employed, most of them.
Most of them are self-employed. But I'm sure you've come across this a lot of time, but I'll still ask you, what are the common misconceptions about disability insurance for business owners?
I'm so glad that you asked me this question because this is something that we get to hear all the time. I'm good. That's the answer you get. I don't need this.
Yeah.
I'm taken care of.
Yeah. I have money sitting in my account.
Yeah. How are you taken care of? A lot of times people say, oh, I'm covered by workers' comp.
Yeah.
I have government plans, or government's going to take care of me.
Yeah.
And the question is, will the government really take care of you? Mm-hmm. Workers' comp. You would only qualify for this if you got injured at work only. Mm-hmm. If your one foot was in the door and one out the door, you wouldn't. So it is very restricted. So please read your workers' compensation booklet carefully and see what you are. The definition of disability is in some cases, you need to be totally disabled before any claims can be paid out forward. Right. Government benefits, we've seen that. What's the length? 16 weeks, 8 weeks, 4 weeks, and then what happens thereafter?
Right.
A minimum disability lasts anywhere between 3 to 5 years.
Yeah, that's called long-term disability.
Long-term disability. And it's unpredictable.
Yeah.
So you could be permanently disabled, you could be partially disabled, or you could be temporarily. You don't know. You cannot diagnose the length of that disability. Every individual come with their own set of challenges that they face. So going back on personal, saying I have enough savings, business owner. As I said, we don't know how the length of the disability.
Yeah.
What if you run out of money? Your expenses don't stop. Income's not flowing in. Mm-hmm. Your savings are depleting.
Yeah.
And as you start cashing in your RRSPs, you're paying taxes to the government.
Right. Yeah. So disability becomes a very good way for them to not worry about your income, because if that stops, at least 70% of what you were making while you were healthy will still come, and your savings will not deplete. And this can come all the way till age 65. Does RBC offer till age 65 or even 70?
Actually more.
Even more than 70?
We can go up to age 70. Yeah. So what happens is after 65, the benefit period reduces down to 2 years. Okay. So if I bought a policy, my benefit period would stay to 65. Mm-hmm. But after 65, it reduces. Now, also with RBC disability policies, we have the long-term care conversion option built in. Long-term care is no longer available out there.
Yeah, I know Desjardins used to have it, Sun Life, most of the carriers have. So tell us something about that as well, because everybody's going to get old and long-term is not even available anywhere. If RBC has that special feature, why this should also be considered while they're buying a disability policy. And my next question I'll ask you right away, can they buy long-term care also separately from RBC, or does it have to be a conversion of long disability?
So RBC, as all carriers out there, are no longer selling standalone LTC policies.
Okay.
That is not available. The only way an LTC policy, long-term care policy, is available to individuals is through a conversion of RBC to CI or disability policy. So if you've got a critical illness policy with RBC, you could convert that into a long-term care or a disability policy. At age 55, a lot of times people know at 55, okay, disability, the risk is at younger ages on disability than the olders. At 55, people are now in the retirement mode, trying to plan their retirement. So they're looking to see what their retirement's going to look like. So they can actually convert their disability policy from 55 to 65, that window period, to a long-term care. And it's for dollar to a max of $6,000 annually.
$6,000
in total. So
monthly $6,000 they will get as a long-term care benefit.
Exactly. So a daily benefit of $200 a day.
Okay, makes sense.
So you cannot exceed. And this is a reimbursement program. So what happens is if you chose to convert it and you could not perform 2 out of the 6 daily activities, you can apply for your long-term care policy.
Is that only for that?
Or it could be home care or facility care.
Okay.
So you can choose what you want to use it for. You do have those options because some people start first off at home. Their preference is to be in the comfort of their own home. If somebody's coming to help them, to, feed them, toilet or bathe them due to some reasons or due to their, limitations that they have. And then there's some people that need to be housed elsewhere, right? So facility care, they need to be under supervision of a nurse 24/7 or a caretaker or giver. So they can do that.
This is so clicking me right now. I know so many people who never had a disability policies, who never had long-term care, and their parents are now with them. They can't take care of them because they're so tied up in their own life. They're busy working. They can't put their parents in the nursing home because it costs them $6,000, $7,000, $8,000. So at least for us, we can plan it now. At least for the business owners and self-employed professionals, they can plan it now. And very especially now that RBC has that special feature, I would like you to say a little bit more about, let's go back to disability.
Yes.
And say that, how is this coverage different for self-employed individuals versus business owners with employees?
So self-employed individuals, usually it's one person.
Yeah.
Okay, one person running, and the profession I gave you, IT consultants. They're self-employed or a convenience store owner. One person running the whole business.
Yeah.
And then as a business owner, they're more like people have 10 or more employees.
Yeah.
They're factory owners or they're running a workshop. So that's a big difference. So their needs are different. A need for one person is very different than a need for a person who's actually paying wages for 100 employees or 10 or more employees. As we discussed this, that is another concept that we have that could fall under the wage loss replacement program, or we've got the guaranteed standard issue program. We can talk about this on a later date. But for self-employed individuals, a business overhead expense would be an excellent solution for them. Mm-hmm. And as a financial advisor and an insurance advisor, always suggest 2 because, as I said, business owners have twice the obligations.
Absolutely.
So they need to make sure their personal front is covered and the business front is covered.
Because both require money and both can't survive without it.
So for business owners, this is a very good feature. Business overhead expense. It is owned by the corp or the business. It is paid by the business, and it's tax deductible.
That was my next question. Oh my God, Nabila, you got it right. I was going to ask you, are there any tax implications or consideration related to disability insurance for business owners? Because business owners only know how to make money. They want to save tax, but in the most compliant way. And they want to make sure that whatever the most they can put it into their pockets and, leave it in the business. So tell my viewers, what is the best thing about that for the tax?
The best thing for that is it's not costing them anything. They can deduct that. So it's owned. If they became disabled, the personal disability would pay them on the personal front. Mm-hmm. It's tax-free dollars because they've paid for it after tax dollars. Mm-hmm. On the business side, they've now become disabled. They're getting disability insurance on the personal side. The business side, that benefit is paid to the business. The business is now going to pay the wages, pay the rent, the mortgage, rental equipment, all the fixed expenses are paid. So that is a tax deduction because it's paid by the corporation, it is owned by the corporation, and it's tax deductible to the business owner. So a lot of times when you offer this solution to the business owner, they jump at it. We're like, okay, it's not going to really cost me anything because I can deduct those premiums. Yeah. And my business is saved. money's still flowing into my business while I can take time and recover.
So my question comes to you, what happens when the business overhead insurance claim is paid to the corporation? Does that add to business's income for that year?
No, it doesn't, because it's paid on tax-free.
So it's paid out tax-free.
Yeah.
So that means premiums are an expense to the business?
It is.
But when the benefit is paid, it's not added in the income?
It's tax-free.
Now let's come back to the personal side. When you pay from your after-tax dollars, the premiums for your personal disability individual policy, and when you get the claim payments, monthly payments, does that add to the income?
No, it's tax-free.
Oh, so that is also tax-free.
Because you've paid taxes already. So you're paying the premiums after your tax dollars. You've already paid the tax to the government.
We all love her. She's a tax. We love you, Nabila. That's the best thing.
So you've already paid your taxes. Okay, you're paying your premiums. You're getting a benefit that is tax-free. It's not going to your income. You're not paying any more premiums to your policy. Your policy still stays in force. Okay, and after you're off the claim, that policy now still stays in force and you start paying premiums. So it's not like a critical illness policy where they've paid you out and the policy is done. This continues. So down the road, you become disabled again. Guess what? You can put in another claim.
Oh. So tell me something. It's a business owner. They claimed for their business overhead expenses policy, but the business was basically running based off that particular person. And now that the person is not functional, is disabled, the business is not doing well at all. Okay. And in this competitive market, it's very hard for the person to come back to that business. And maybe they think about shutting the business. And after 2-3 years of claiming on the, business overhead, they decide that, no, this cannot be done. I would need to start another business. What happens to the policy?
So they can convert that policy into an individual DI if they don't have the individual DI.
Okay.
A lot of times the benefit period is only 24 months.
Okay.
And by then a business owner knows
whether it's going to thrive
or not.
Okay.
And business owners always have exit strategies on their business.
Right.
Now, depending on certain businesses, they have shareholders.
Yeah.
They have different types of they're partners in the business. Disability buy-sell is another concept that you can apply to. So there's certain businesses that have shareholder agreements and then disability buyout. So if you had an individual that they knew, okay, they've got 2 other partners, they've bought business overhead expense, they each have to buy it on their portion.
Right.
Then they've got a disability buy-sell in place too as well. So after 24 months, this business owner knows, okay, I'm not coming back to work. The other business owners can buy their share.
Or if they replace him,
they could replace him. Now for the 24 months that the benefit period is, they could hire somebody in his place to run that business. And if past 24 months, they know this is it. It's not going anywhere. The disability is going to last longer, or he's not capable of running that business, then the exit strategy should come in place for that business owner.
Wonderful. So now I would like you to tell all my viewers, buying a disabilities policy is not like going to the bank, paying the money and getting the policy. If you are already not in the good physical health, you cannot even get it. So what is the best time to get it? When should they get it? And why should they get it? Once again, before we wind up. I don't want you to go, Nabila. I have so many questions, but I think we'll have to because we're time constrained. So please tell my viewers.
Please get it now or yesterday. That policy is so important. After COVID, we saw a lot of mental illnesses out there.
Yes. And that's covered by disability.
It is covered by disability.
Yeah.
You do not want to be one of those that have an exclusion on mental illness in your policy.
Right.
There are a lot of disability policies that are being issued. Mental illness is one of the most difficult illnesses to diagnose.
Very right.
Anxiety, depression. They comes in all shapes, forms, sizes. People, university students, medical students out there. There is so much anxiety. There's so much depression. So before you have, as soon as your child hits 18, buy disability insurance on them. If you're healthy and you're young, buy it before any of those issues come. Another feature that I would really highly recommend is adding the future income option rider, okay, onto your disability policy.
FIO.
FIO. Buy a small amount. This is affordable now because some people premiums. Buy a small amount, add the FIO on it. As your income increases, you increase your monthly benefit. That way you've locked in medically your underwriting.
Insurability. Yeah.
Insurability. So you don't have to worry about, oh my God, your income increases, there'll be no mental illness exclusions in there. And if you become depressed or you anxiety down the road, because we've got non-cancelable contracts. Once that contract goes in place, it's non-cancelable. If your history changes, your medical history or your occupation changes, guess what? We'll never ask you, why did your occupation change? So if you were a 4A and you came down to a B, we will not question you. We'll pay
You're
your
still
claim.
paying that low premium. I had that in my policy, FIO, future insurability option. I started with a lower one, and then every year they send me one letter saying that, okay, you have an option to increase. I kept on increasing, and now it's increased so much because that's where I feel that we have that peace of mind. I'm myself a self-employed.
Yes.
Self-employed professional. You can say a business owner as well.
You are.
I do have employees. I do have a staff. I have business overhead expenses. I have everything. And I really feel that gives me a peace of mind and I can put 100% of myself towards working as long as I don't get burned out.
And you are the prime example of a business owner that would get business overhead expense.
Absolutely, absolutely. This was so interesting, Nabila. And you know what? I feel like talking to you more, but I know people have very, very little attention span these days to even absorb. So we have to come back.
Absolutely. Thank you so
back.
much for having me. Thank you so much for having me. It's been a pleasure.
Thank you so much. And this has been very informative and helpful, not only for our audience, but Nabila, my friend, for me too. And that was another episode of the Simple Wealth Wisdom podcast. Please let us know in the comments what you like the most about this podcast. And if there's anything else you want to see or ask, and I'll make sure to bring that to you in our future podcast. Watch for us again. Until next time, stay safe. I'm Gakhar. Thank you.